Hello, everyone. Thank you for attending. And today I'm going to talk about the real-time real estate market uh, update on Las Vegas, Nevada. Thank you once again for attending. And my name is SeeWing Yee from the Yee Real Estate Network. Let me briefly share with you my background. Uh, I own a real estate investment club here in the San Francisco Bay Area for almost 20 years. And we have taken mostly California real estate investors out of state to buy cash flow turnkey properties in the best markets of the country. And although we have members, free members that are within on our database that get updated information of where to invest, and we have a relationship with many different markets, turnkey providers, meaning they provide property management, they offer turnkey properties within their off-market portfolios throughout the country, and most of our markets are located in the south and southeast because of the affordability and rent-to-value ratio and cash flow with 25% down makes sense for out-of-state investors. So I'm talking about Las Vegas because we have a lot of experience working in the Las Vegas market from an investment point of view. Actually, I bought one of my first property back in 2003 in Las Vegas. I remember I bought my single family home rental property for I remember very vividly for 268,000 back in 2003. Pretty large square footage, around 2,000 square foot. But I sold it like 6 years ago. I should have kept it. I sold it like 6 years ago for I think around 385,000. So I don't know the value right now. But anyway, a number of our investors, mainly from California, have purchased investment properties through our referral network, and we do have referral network still in Las Vegas. This realtor in Las Vegas, he helped people to buy primary homes, they buy and sell primary homes just like any other realtor. He also, Mr. Glenn Plantone, also help people buy investment properties. So we understand the up and down of the Las Vegas market. Of course, Las Vegas, just like many markets, especially in the Sun Belt, the western portion, in 2008 has crashed tremendously. So, Vegas is a boom and bust market. However, ever since after the 2008 crash, and then the market slowly rebounded. So we have achieved very good consistent appreciation from 2010 to 2019. Then, of course, the pandemic, the past 2 years, just allowed Las Vegas to prices skyrocketing in the past couple of years, just like in many markets, right? So, so the question is, moving forward, given what's going on right now, will this market going to crash again, or this market will be different than 2008? So, so let me share my screen and talk about it. I'm using the Redfin weekly housing market data to give you some real-time data as to what's going on what in the Las Vegas market. So without further ado, let's get it started. All right, enough of my background. By the way, I will share many other markets on a weekly basis or in different part of the country. Just watch for my channel. And you may subscribe to it, of course, and click on the views or whatever you need to do. We can cover many different markets on several times per week in Florida, Texas, Tennessee. I mean, Utah, California, because physically I've been living here in the San Francisco Bay Area for more than 30 years, so I understand even the California market very well. So. All right, so first of all, let's do pending home sale. All right, let's start with pending home sale and see what's going on. If I can find it, okay, pending sales. Here it is. Let's see what's going on. All right, so the black line is the currently 2022, and as you can see right here, the red is the orange is 2021 last year, and the purple is 2020, and the blue color is 2019. So let's go over currently what's going on. the ending date July 31st of this year. The pending sale is 460, 450, 89 pending sales, right? So they are under contract and has been going down since this past May, right? When the interest rate skyrocketed from 3% to right now. Right now it's between between 5 and 6%, right? I mean, the mortgage rate has changed. Is in a very volatile state, as you may know. Anyway, so ever since the interest rate has risen back in a few months ago, the pending sales has decreased quite dramatically, whereby right now it's only 464 pending sales, and year over year is minus 44%. So it's a 44% less than same time last year, 2021, as you can see, right? So that's that this is trending. So that means is sellers are not selling enough. Okay, right. So there's one data and then let's right now let's look at new listings, right? New listings we see right now. Once again, the new listing is year over year is down almost 15% from last year, right? And right now in June, but back in June, a few weeks ago, it has 1,260 new listings, and now it has 1,092 listings. So year over year, very, very similar than 2020. And yes, it's very, very interesting. New listing is not very much, okay? So it's hard to tell what are the trends. And then let's go over the price drop. So I want to clarify, what does that mean? It does not mean the prices are dropping, precipitously. All right, it doesn't mean like that. So, but this vertical trend is really very, very interesting, somewhat disturbing. So maybe what this indicates to me is a 8.3% price drops. Okay, I mean in recent few weeks, right? Pretty significant, all right? And percent of active listing with price drop is 12%. So I mean, if you quantify that over over the course of 12 months, I mean, you could make the argument that this 12% over a 3 months period, we have seen this. What if this trend continue by the end of this year? We're talking like triple digit, 30-40% of active listings with price drops. Now, when we say price drop, it doesn't mean the value of the house dropped. It just means that when the seller initially listed the price, they didn't get the memo, right? They are unaware, or maybe they are in denial that the market has changed due to interest rate, and the demand has subsided quite drastically since the beginning of this year based on the interest rate rise. So it remains to be seen where this arrow going to go to the next few months. I suspect the percent of active listing with price drop will be decreased in the next few months, because whoever the realtors working with the seller, moving forward in this Las Vegas market, they're going to they could recommend their sellers to their clients to price their homes, based on what's going on with the market condition. So this is a very disturbing trend, if you will, because if you compare to 2022 last year, right here, right about here, there are very, very few listings for the price drop, because at that time last year, because of low interest rate, there are much more demand than there are supply. So last year is not a fair comparison. Similarly to 2019 before the pandemic, we see pretty normal market, as you can see, right? Year over year 1.3%. This is a very disturbing trend. So we remain to be seen what's going to happen with that. So again, price drop does not mean the true price of a home has decreased so dramatically. No, it's the listing price was listed way over what the market are willing to pay for. So the listing agent asked their seller to drop the price to a market value. All right, does that make sense? All right, and then let's go over new listing medium price. All right, let's go over medium price. So what are the price that the seller are listing currently? And as you can see, the new medium listing price as of right now, the middle of this year, is 450,000, right, as of July 31st. And year over year is an increase of 16.46%. So we see a very, very significant increase from 2021, right? 2021, the listing price year over year was 387 compared to right now 450. So the price have appreciated pretty significantly from year over year. Now, in fact, let's compare 2019 before the pandemic, right? The median price of a home in Las Vegas was a very modest, very reasonable, very undervalued, in my opinion, at 293,000. Now you fast forward 3 years, right? 1, 2, 3 years from 292 to 450. Now, I'm not going to do any calculation. So that's almost like 80% appreciation in value just for the past 3 years alone. So what does this mean? This means it's not only Las Vegas. We're seeing this happening in many parts of the country, in Texas, in Florida, in Phoenix, Arizona, in Boise, Idaho, of course. I might want to go over that as well. Even in California, there are some very huge price increases due to the skyrocketing of prices. So now all I can say is, for those of you that have purchased, whether you as a primary home buyers or as investors in the past 3 years, well, you made a windfall, right? You have achieved significant amount of wealth for yourself and your family. The question is, this 450K of medium new listing price, is it going to stay the same? Is it going to go down or whatever? So this is a nervous moment for a lot of people out there. So look, I've been studying data, real estate for many years. We helped many people over the years, and I own properties all over the U.S. So I know the national market and the local market, many markets. What we're still seeing is still low supply. We're seeing like 2 months of supply of inventory in many parts of the U.S. And Las Vegas probably have more than 2 months of inventory. I might want to show that as well. So Las Vegas is a little bit different. So I do not believe Las Vegas is going to crash because the people that bought, or they have good loans, right? I mean, there's no more subprime loans that we saw back in 2008, right? So people that bought Las Vegas oftentimes they come from California. They bought for all cash. They bought with very high down payment. They're very qualified primary home buyers that bought with 10 to 20% down payment. They're very good high credit score, and investors that bought as a pure rental property, most of them from California, from Southern California. They come over 2 hours into Las Vegas and buy a second home here because the prices in Las Vegas are low, very low compared to Southern California or in Northern California where I live. So you guys, I know you guys are nervous, but so some of you are going to say, hey, is Las Vegas going to crash? I don't think so. It's not like 2008. 2008, we have people that can fog a mirror and qualify to get a loan, right? So it's a whole different market. I'm not going to spend time on this. It'll take me 1 hour to explain why 2022 is very different than 2008 crash, right? It's a completely different market. All right, so with that said, let me see what else I need to show you. Let's go over new listings. Yeah, so as I said, new listings are not still, there's a very few people are doing transactions these days. So that tells me many sellers are pausing. They're not selling. They're sitting on their interest rate that they refinanced a couple of years ago at 3% or less, right? So then a lot of people are not willing to sell. The people that are selling in the Las Vegas market, they have this FOMO, FOMO, fear of missing out. Maybe their realtors tell them, you better sell your property before the market crash. So a lot of people are sellers, that is, they are very emotional. They get paralyzed with fear, so they put their whole homes in the market and just take the money and run, right? They have achieved substantial amount of equity already, at least in the past 2 years, right, during the pandemic. So they don't mind walking away with some profit and pay some taxes or whatever, right? But we need to be seen. So let's talk about, let me see what else. Let's talk about, average sale to list ratio. This is important, okay? Average sale to list ratio, that tells you that whatever is the list price, what is the actual sales price based on the list price. So now, earlier, a few months ago, right, in May, we are seeing average sale to list price like 1% over the list price, right? And then it has gone all the way down to if the average list price is 0.099, that means whatever is the final list price by the seller, the buyer are able to buy a little bit below the list price, to the tune of 1%, right? So compared to last year, 2021, right? 2021, the average sales list price is higher, 1% or more higher than list price, because people were bidding last year. There were multiple bidding wars, so people are paying more than the list price with multiple offers. We're not seeing multiple offers these days, right? That's pretty clear. So anything else I need to show? Month supply. Okay, let's all go over the month of inventory available, which is right now is 17 weeks. So 4 multiplied by 17, like a little bit more, like 4 months of supply of inventory. Most experts think that 6 months, 4 to 6 months is a balanced market. Right now we have 4 months year to date. So is not a buyer's market yet. It's getting there if this trend continues. So therefore, 4 months available inventory, that tells me that buyers have more negotiation power. I mean, buyers can buy those Las Vegas new construction with some incentive. Some of you know that the builders in Las Vegas market has kind of overbuilt based on the lowering of the demand with a higher interest rate. They have a lot of new homes sitting in the market. And so the building construction industry, they want to, they want to sell their existing complete new homes inventory quickly. And because of the lower demand, there are a lot of the national builders in Las Vegas, they are lowering their price. I don't know how much, by 20 to 30,000, depends, right? And they are offering some incentive, right? They are offering to pay. If you buy, you can use their in-house lender, and they could give you a lower rate. They can help you buy down the rate, without you coming out of pocket. So they give you a lot of incentives. So that's a good thing. So as a buyer, you have a lot of opportunity, which was not available to you prior to this year. So. But then again, I mean, there are few buyers out there that can qualify to buy these days, because the interest rate increased from 3 to 6%. That means you have less purchasing power than you had last year. So that's a good and bad situation. So anything else I need to go over. So this trends. So again, the recap. All right, the recap for me is it's still too early to tell. In the Las Vegas market, I know every market is different, right? There are more than 400 metropolitan statistical areas, right? Every market is different. There's no such thing as a national real estate market. I mean, every city, every metro, every sub-market is very different. It's different down to the, not only down to the metro, not to the city, it's down to the neighborhood. It's not even down to the neighborhood, it's down to the street that you live in. So this data I should share with you is it cover the entire Las Vegas metro, consists of more than 1 million people, right? So some of you are gonna say, oh, in my neighborhood, you know, things are still hot. Well, I haven't seen any kind of price drops. There are still multiple offers. That's happening. In some other neighborhood in Las Vegas, you know, you have some, you know, 5% price drop or something, right? Or sellers are decreasing. So everybody, you know, it's just have their own opinions. Every neighborhood is different. So you know, remains to be seen what's going to happen. All right. So that's all I have to say. That the recap is, in my personal opinion, there are still low supply relative. You know, the supply of the inventory is below what's expected, and demand, although demand has moderated due to higher interest rate. Who knows, right? In the future, things may, if interest rate decrease in the next 18 months to 5 to 6% right now, to you know, 4.5 to 4%, and we may have another boom, right? We may have another frenzy, multiple offer situation down the road. So you never know. But suffice to say, Las Vegas is as a city economically has grown quite tremendous, right? There's a population growth. People working remotely. They don't mind to buy a primary home, investment home, or second home, vacation home here in Las Vegas, because it's so much cheaper than California and elsewhere. So the future is going to be very bright. People have a lot of equity in this market. It's not like 2008, right? I mean, do you know that 40% of all mortgages in the nation is free and clear? People have no mortgages, and the people that have the rest of the people that have mortgages, they have a lot of equity because appreciation has grown so fast during the pandemic, 30, 40, 50% in many markets, including Las Vegas, as I indicated to you, right? So there's no need to panic, no need to panic sell, no need to whatever for those of you seller. By the way, a lot of sellers are locked into their 30-year fixed rate mortgage of 3% or less. They have no motivation to sell. They may want to stay on in their home for the next 30 years because their mortgages are fixed rate, are fixed, right? They're not going to sell their 3% 30-year fixed rate mortgage home to move up to buy another home that costs a lot more, and then paying a loan of 6%, they have to double the payments. That's crazy. So sellers are not motivated to sell. And builders, by the way, once they get rid of their current inventory, they're not selling either because the lack of demand, they are pausing from constructing any more new homes. So I even foresee that the builders, they're not supplying enough homes into the marketplace for the foreseeable future. You have builders, new homes not coming into the market. You have sellers that are locked in. They're not selling because they're happy with their extremely historical low interest rate. So soon we might see even more of a lack of supply of homes, so a lack of inventory all over again in the next few years to go. And we may see a tremendous imbalance between lack of supply and high demand in the foreseeable future. So I believe in the Las Vegas market. Do not become too emotional and selling out of fear, selling without thinking everything. Think it through, right? And consult with your financial advisor. Consult with your reputable, good realtor that you're working on. Sellers out there and buyers, right? You buy if you want to buy, if you can afford it. You have some cash reserve. If you plan to live in an area for the long term in Las Vegas, it's okay to buy in this particular market because you have a more leverage nowadays, right? So that's all I have to say. Thank you so much for listening, and I hope you got a lot of out, out of this presentation. I'm going to talk about other markets, many markets that are similar in similar fashion. I'm going to give you real-time information, whether you are a primary home buyer, owner-occupied buyer, whether you're investor. Oh, by the way, investor, right now, the median price of Las Vegas is 450,000, right? So the tipping point, the cutoff point, if you want to buy an investment property for cash flow, which is very, very hard to do these days, if you can find a Las Vegas single-family home, for example, they can buy hopefully with a discount for maybe 350,000, for example, in a good area in Las Vegas, as long as you can get a gross rent of maybe $2,400 to $2,500. By the way, a lot of people are locked out of buying because of affordability factor. They are renting, so the rental is, we're seeing skyrocketing rents. Skyrocketing rents are from year to year, like 10, 20, 30% increase in rent, right? There's a lack of homes to rent, and the landlords are raising their rent. So if you want to become an investor, for those investors, I mean, you're not totally shut out the Las Vegas market. Find a home. Hopefully, you can get a discount for $350K, around that range. Rent it out for $2,500 and put 25% down payment. You will get at least a break-even cash flow monthly, maybe a slight monthly positive cash flow, and invest for the long term for investors. For primary home buyers, you can still buy as long as you're confident you can qualify for the higher interest rate and buy it. And then as long as you plan to stay at your home for 7, 10 years or longer, you will overcome the short-term volatility, right? Buy and hold long-term for primary home buyers and real estate investors as well. So if you like this video, please click the like and also subscribe to my channel. And better yet, you could go beneath this video and log into my website, and then sign up for our free newsletter so you'll learn more about real estate investing in different part of the market. I have a very good knowledge of many markets over the years, like 30 or 40 markets. I'm very knowledgeable, which I myself purchased properties over the years, or our investors that purchase markets in all these places: Las Vegas, Arizona, California. Not really California, okay, it's too high, right? But in Texas, Florida, North Carolina, we have investors bought properties, good cash flow properties at a very low price, good rent, good property management in many locations. All right, thank you so much for listening. My name is SeeWing Yee from the Yee Real Estate Network, and I'll see you on the next video to talk about another market similar to this Las Vegas market. Thank you so much. Have a nice day. Bye-bye.